Hello everyone and welcome to Ticker.com's news channel on YouTube. On this channel, we review stock markets, discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. On the economic front this week, investors focused on housing market data in the U.S. and comments from the Federal Reserve Chair Jerome Powell. Federal Reserve policymakers have perfected the craft of doublespeak and data-dependent policy that has so far failed to bring down inflation to the target level of 2%. Investors have remained divided, but more are convinced that the Federal Reserve is more likely to lift rates in the coming months, and rates are expected to stay higher for longer this year and probably the next. The economy's vigor was confirmed by Chairman Powell in his speech delivered at the annual symposium held at Jackson Hole, Wyoming. So far this year, GDP, gross domestic product growth, has come in above expectation and above its long-term trend, and recent readings on the consumer spending have been especially robust, noted Powell. In addition, after decelerating sharply over the past 18 months, the housing sector is showing signs of picking back up. Additional evidence of persistently above-trend growth could put further progress on inflation at risk and could warrant further tightening of monetary policy. Chairman Powell's comments were confirmed in the new homes and existing home sales data released this week. New home sales in July rose to a seasonally adjusted annual rate of 714,000, the Commerce Department reported Wednesday. New home sales rose 4.4% from the downwardly revised level in June and 31.5% from a year earlier. Home builders sold fewer pre-construction homes as builders cleared home inventories. Homes available for sales totaled 437,000, about 7 months of inventories, and new homes sold prior to construction declined by 20,000 to 93,000 and to the low of the year. The median price of a new home sold declined to $436,700, and the average sale price was $513,000 compared to $478,200 and $564,900 respectively a year ago. Existing home sales also declined 2.2% from a year ago to a seasonally adjusted annual rate of 4.1 million, the National Association of Realtors reported Tuesday. Elevated mortgage rates and limited home inventories are keeping the number of transactions down. Single-family home sales declined 1.9% to 3.65 million units, and condominiums and co-ops dropped 4.5% to 0.45 million. Median existing home price rose 1.9% to $406,700 and stayed above $400,000 level for the fourth time. The inventory of existing homes rose 3.7% from the previous month to 1.1 million homes at the end of July, or about 3.3 months of unsold homes at the current monthly sales rate. Investors also reviewed durable goods orders data. Durable goods orders, which represent demand for big-ticket appliances, computers, and transportation equipment, declined more than expected in July, the Commerce Department reported Thursday. New orders for manufactured durable goods declined 5.2% in July, following a downwardly revised increase of 4.4% in June. The orders declined at the fastest pace in July since the onset of COVID-19 outbreak in April 2020 because of the weakness in transportation orders. Durable orders, excluding transportation, increased 0.5% in the month, indicating stable demand for manufactured goods. We now turn our attention to economic data in Europe. The German economic growth was flat in the second quarter compared to the previous quarter and declined 0.2% from a year ago. The Federal Statistics Office of the Statis reported Tuesday. GDP declined 0.6% after adjusted for price only, as there was one less working day in the second quarter compared to a year ago. The German economy stabilized after 2 quarters of decline when the economy contracted 0.1% in the first quarter and shrank 0.4% in the fourth quarter of 2022. The producer price index in Germany declined more than expected 6% from a year ago in July, the Federal Statistics Office reported Monday. In other economic news, the number of people registered as jobless in mainland France jumped 23,800 from the previous month to 2.82 million in July, the steepest increase since April 2021. The sharp jump in registered unemployed people lifted unemployment level to their highest level in the year so far. We now turn our attention to Asia. On Sunday, China's central bank National Financial Regulatory Administration and China Securities Regulatory Commission together pledged to offer more credit supports and regulatory overhaul to support the economy, without giving any details. In the previous week, China reported a flood of economic data indicating weak retail sales growth, fixed investment growth, and rising jobless rates. China also said it will stop publishing youth unemployment rate data. The youth unemployment rate has risen from roughly 12% in 2019 to around 20% this year. Record high, but the overall jobless rate has held steady near 5.2% in the period. One factor behind the high level of youth unemployment has been the massive imbalance between a surplus of graduates in a faltering economy that has failed to create sufficient jobs in the labor market. In 2023, graduating class in China jumped to a record high of nearly 11.6 million students, an increase of more than 40% from 5 years ago. On Friday, in India, investors reviewed the RBI's latest policy meeting minutes. Policymakers remained focused on lowering consumer inflation to 4%. The latest minutes of the meeting held on August 8, 9th, and 10th showed. The committee noted improving rural demand, stable demand in urban areas, and rising government spending will continue to drive the economic expansion in the current financial year. Policy members noted the weakening overall inflation from 6.8% in March to 4.3% in May, but the recent surge in vegetable prices led the rebound in inflation to 4.8%, and inflationary forces are likely to harden between July and August. In India, food prices flares can permeate through wages, rents, transportation costs, and importantly through expectations into core inflation. Looking at the stock markets around the world, we start with the US. Global markets traded mixed as European and Asian markets lagged the US market advance. The US 10-year Treasury yield hovered near 16-year high, causing restrained or muted gains in the US stock or popular averages. U.S. market indices closed higher after tech rally lifted market indices for 2 days in a row on Tuesday and Wednesday ahead of the Nvidia quarterly results. Market indices in New York closed higher, halting a 3-week long slide as investors debated rate paths and Chairman Powell's speech on Friday. European markets struggled after German economy stagnated and wholesale inflation fell more than expected. European natural gas prices halted a 3-week advance this week. In Asia, Chinese markets continue to drift lower for the 3rd quarter in a row, but market indices in Hong Kong halted after falling for 3 weeks in a row. Market indices in India closed down for the 6th week in a row on inflation and rate path worries. On the merger front, Earthstone Energy Inc. soared after the company agreed to be acquired by Permian Resources in an all-stock deal that valued the company at $4.5 billion, including the company's debt. VMware gained after Broadcom said the UK's Competition and Market Authority gave its final approval of the purchase of the cloud computing company. Let us review stocks in the news this week, and we start with the stocks that moved up. Palo Alto Network jumped after the cybersecurity and network infrastructure company reported better than expected quarterly results. VMware gained after Broadcom said the UK's Competition and Market Authority gave its final approval on the purchase of the cloud computing company. Nvidia Corporation jumped after the chipmaker reported sharply higher sales and earnings in the latest quarter. Kohl's Corporation, department store chain operator, rose after the retailer reported better than expected quarterly results. Fabrinet, the electronics manufacturing company, jumped after the company reported strong quarterly results, and the company is expected to benefit from the AI-related needs. Reviewing the stocks that are on the downside, T-Mobile US Incorporated declined after the company said in an 8-K filing with the SEC that it plans to take a one-time pre-tax charge of $450 million in the 3rd quarter to account for 5,000 job cuts, about 7% of its workforce. Boeing Company declined after the company said fastener holes on aft pressure bulkheads were improperly drilled on some versions of 737 MAX jets. This will further delay deliveries of these planes. Spirit AeroSystems plunged 15% after Boeing highlighted manufacturing defects on the fuselage made by the company. Foot Locker plunged 30% after the specialty retailer reported sales decline almost 10% from a year ago, and the company also suspended its quarterly dividend. Peloton Interactive dropped 23% after the fitness equipment company reported wider than expected loss, and the company forecasted weak sales outlook in its fiscal first quarter. Nike, the athletic shoemaker, extended losses to the 10th session in a row on the worries of sales in China and the US. Dick's Sporting Goods plunged 20% after the company missed earnings estimates and the retailer lowered guidance for the year. Looking ahead at the upcoming economic releases next week, in the US, investors will be awaiting JOLT report, wholesale inventories, international goods trade data, second estimate of the second quarter GDP data, personal income and spending and PCE price index, and non-farm payroll data. In Europe, investors will be looking forward to Spain's inflation and tourist arrivals data, Italian inflation rate and German jobless rate and retail sales data. That's all for today, and we will see you next week, and you can read daily market updates on ticker.com.